Hello and welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always Reema Tendulkar and Hormis Fatakia. Good morning, guys. It's a Monday morning, but a truncated week. And I was hearing Nigel and Manglam, they took credit for the surge that we're seeing in the Nifty today and they put it on us. They're like, the Trading Hour team has the pressure to see whether it continues or not. Jokes aside, of course, last week was 6 consecutive weeks of losses for the Nifty. Today, we are seeing some rebound, of course. It touched that 100-point uptick mark as well. Right now, up around 93 points. Banks are doing really well, lending support to what we are seeing in the markets currently. Earnings coming in thick and fast, so a lot of reactions to that as well, which we are talking about in greater detail. So if we talk about the major indices right now, Nifty at the day's high for sure. We have mid-caps which are gaining 0.6% there, and that is an outperformer as we speak. Banks are lending support. All the sectoral indices, they are in the green right now. Nifty PSU banking index, that's lending support, and that explains the move that we are seeing on Bank Nifty as well. But again, we are towards the fag end of the earnings season. So a lot to talk about.
Indeed. Let's just take stock of the big movers at 11 o'clock right now on the, at least in the Nifty large cap screen. It's Tata Motors right on top. Profits were down 35%, but largely the impact was an account of tariffs. And excluding that, analysts say numbers were in line, plus the stock is corrected 14% from the start of the year. And now all eyes will be on the festivities to see if we can take it forward. SBI continues with its gains. Some of the pharma names, Sun Pharma, Cipla, Dr. Reddy's, these are higher by 1.5%. Trend is a big mover, 2.5% up on Trend this month. It's seen a gain of close to about 9% thereabout. But Hormis has now moved over to the big wall and he's going to put the spotlight on some more stocks. Hormis.
Some obvious cases and some that have sprung a surprise among the movers and the first couple of hours of the trading session. Can't not talk about PG, Electroplast, and barring the last 2 days, the stock is now down for the 4th straight session and it has almost shed 40% in those 4 sessions. And just as the management was speaking to us earlier in the day, there was a block deal worth over 500 crores that took place in the stock. And as a result of this block deal, we have already seen 3 crore shares of the stock already being traded compared to a 20-day average of just over 6.5 lakh shares. The stock down 16% as we speak. The other positive surprise has come in from Yatra Online and it's a result reaction, a 20% upper circuit on the stock. It is the best single day gain since the stock has listed and 60 lakh shares have already been traded on the stock compared to its 20-day average of just 1.5 lakh. But despite this move today, the stock remains below its IPO price, which is of 142 rupees a share. HBL Engineering is the other one among the top gainers on the small cap index today. It's the biggest single day gain it has seen since March of this year. We've already had 1.5 crore shares that have traded in today's session compared to a 20-day average of just over 2.5 lakhs. So a very sharp volume mover on the upside. And as a result of this move, the stock has turned positive on a year-to-date basis, continuing with its trend of delivering positive annual returns every single year since the start of 2020. And a negative mover today has been HDB Financial, and after a ho-hum to steady listing, the stock is back to its IPO price of 740 rupees a share. Just last week, the stock even slipped below that, making a low of 732, and multiple analysts initiated coverage on the stock today, but none of them see any significant upside on the stock. So while NSDL continues to scale newer heights, HDB Financial, another major IPO of the year, is back at its issue price.
Okay, all right. Thank you so much, Hormis, for joining us. So with that list, as always, that's one set of stocks which are in focus and they're buzzing either on the upside or on the downside. The other pocket that I'm watching out for is the oil marketing companies. They open with a spike but are off from the highs of the day as well. There is an important news that has come by, and that's the LPG compensation that the government has announced to be given to oil marketing companies, 30,000 crore rupees in terms of LPG dues. This is, of course, lower than the 41,300 crore rupees, which is pending till date. Nevertheless, it is a positive for these stocks. However, it is unclear whether this is a one-time grant for the remaining losses or they will be compensated as well. So that remains to be seen. For now, Jeffrey says that they estimate an upside of 29 to 42% on EBITDA for FY26 and 38 to 70% for profits. And this is assuming that the compensation is fully paid by in FY26 itself. ICICI Securities says that LPG compensation is a material boost to fortunes. It helps offset margin worries in FY26 FY26 itself. Morgan Stanley says they prefer HPCL and BPCL. It could boost FY25 earnings by 75%. Their deleveraging could happen by 12% and consistent return on capital employed between 14 to 15%. But there is a downside risk if fuel prices are cut. That is something which would mean under recoveries in the other part of their business as well. UBS says that payment is equal to 74% of their FY25 dues, 62% of dues till date. That is 41,300 crore rupees. It's around 8 to 16% of the book value, June 2025 book value, and equivalent to 6 to 9% of current market capitalization of all these companies. So a definite positive, but the stocks have come off sharply from the highs of the day. So to understand that, let's get in Nilesh Ghuge, who is the institutional analyst at HDFC Securities. Nilesh, good morning. Thank you so much for joining in. First up, what do you make of the compensation that has come by? Do you think the companies will see a major change with just this, or they need more in terms of compensation?
Yeah, hi, good morning. So, as you mentioned that already they lost about 41,300 crore in FY25, and this 30,000 crore is not sufficient to compensate for the last year's under recoveries. Still this year also, till date, the company are making losses on LPG per cylinder in the range of about 165 to 170 rupees per cylinder on their subsidized cylinders. So these are not adequate, but still I will say it's a slightly positive because at least they are getting something to compensate, some compensation out of their 41,300 crore loss last year. So that's the positive part out of this.
Nilesh, as you said that, it's good, but it's not adequate. So do you think this is going to be a one-time grant, or will we see continuing support from the government? What happens to the balance 11,000 crore of under recoveries which is still pending?
Yeah, there is no clarity as we speak, but in my opinion, government will compensate in due course of time. But it will not, if you look at the current compensation, it is not adequate. So in due course of time, they will compensate oil marketing companies, not through direct subsidies, but maybe through another way to compensate, to earn them some marketing margin or something like that.
You know, Nilesh, there has also been a cut to the number of LPG cylinders under the Ujjwala Yojana. Does that do anything to offset any potential further loss that could have happened from the under recoveries, or even that is not a very meaningful step to offset any further loss that could have come across for these companies either?
Yeah, this will definitely help. On top of that, if you look at the step that Ministry of Petroleum has taken in April, on 8th of April, they already raised prices of cylinder by 50 rupees. At the same time, the benchmark Saudi prices, the LPG prices, have already corrected from the peak of about $630 in December, January to now around $430. So already they have corrected. So these 2-3 things will definitely help oil marketing companies to cut under recovery in FY26.
Nilesh, what are the current marketing margins for these companies that we are seeing right now? Do you think there is a possibility there could be a fuel price cut?
I do not see in immediate effect any cut in the marketing margin. They will continue to earn decent marketing margin. Government may allow them to earn marketing margin.
If you can quantify, what are the current marketing margins on both petrol and diesel, and the average as well currently?
Our back of envelope calculation indicates that it's in the range of 8 to 10 rupees on petrol and diesel, in that range.
And what would your top picks be in this space? What is something that we are watching out for? Because we are looking at refining capacities globally. We are seeing a lot more supply that has come by. Singapore GRMs did see an improvement, but that's not something we saw in HPCL's numbers as well this time around. For IOCL and BPCL, the numbers are yet to come. What is one important thing that investors should be watching out for in FY26 when it comes to OMCs?
We do not see a significant jump in refining margin. But oil marketing companies will continue to gain on the marketing front. That is a positive for oil marketing companies. You are right. They already increased the capacity, particularly the HPCL expanded their capacity, and that will boost their EBITDA and PAT in going ahead. But in the space, oil and marketing, in the oil and gas sector, we are positive on CGD compared to oil marketing companies.
And in CGD, you like both IGL, MGL, or you have a preferred pick?
Yeah, I prefer MGL over IGL. Yeah.
Okay. Thank you. Thank you very much, Nilesh, for joining in. Get into a break. On the other side, we'll put the focus on crypto market. Manisha will join in on the other side.
CNBC-TV18 presents Crypto Corner, powered by Coin DCX.
Welcome back. It's Crypto Corner time, and Manisha is here to tell us what is happening in the world of the digital currency. Today, she's telling us how to invest and what to do with your investments in crypto. Manisha.
Oh, well, absolutely. In Crypto Corner, we're talking about how to invest to begin with. And with these investments as well, you can earn passive income. So it doesn't just stop at buying and holding, but also earning on that. So let me remind you that India is one of the leading crypto markets with many centralized exchanges. All you have to do is open an account there and you could start trading. Also, let me tell you that owning and trading and holding cryptos in India is legal with profit taxable under law here. Also, just to take you through the kind of taxes that we have at this point in time, it's a 30% tax on profits on whatever you earn. 1% is a TDS, and there is an additional 4% cess for health and education as well. So heavily taxed, but it is allowed to be traded in Indian markets there. Just to give you an example, losses here cannot be offset in sense of profits in crypto. So if you have made a profit in case of your crypto tradings, 34% of that goes to the government. But if you made a loss, then 100% of that loss is to be borne by the investor itself. Well, all crypto exchanges in India have a KYC verification. So you have to, once you open an account, there would be a KYC verification. And then you can start buying crypto with as low as 100 rupees as well. There are a lot of people who are now doing SIPs, buying disciplined as well, and absolutely buying in those blue chip cryptos there. Well, as of now, crypto is not recognized as a legal tender in India, and it lies outside of the traditional banking system. Interestingly, you can actually earn on your crypto holdings as well. One of that is yielding. Lenders can earn yields that often exceed traditional saving rates, as the history has shown us. Also, borrowers get access to capital for a leverage trading here. You also are looking at centralized services after fixed rates and institutional security. Apart from yielding, it also has to do with staking. People tend to earn with staking as well. This is a practice of locking your digital tokens to a blockchain network. Well, with this, what you can really do is that the investors earn awards, which is usually a percentage of tokens that you would be staking. The on-proof blockchain is something that leads it to security, and staking earns the right to participate in proof-of-stake blockchains as well.
Okay, all right. Thank you so much for all those details, Manisha. With that, we'll do one thing. We'll slip into a break. When we come back, we'll get you more on the markets and stock-specific action.
CNBC-TV18 presents Crypto Corner, powered by Coin DCX.
Welcome back. The mid-cap index is holding up pretty well, up about 0.5%. EPAC Durables has slipped nearly about 3%. Remember, there was a large block deal which took place last week. Augusta Investments, which was a significant public shareholder in EPAC Durables with a more than 10% stake, has not exited, but sold close to about 5%. So that's a stock which is under pressure and slipping a tad bit. And Sri Lotus Developers, one of the recent listings from last week, very strong listing, and that stock has retreated a bit. Nagaraj Shetty from HDFC Securities is now joining in for a quick technical check on the markets. Nagaraj, good start to this truncated short week. Do you think we can build on the momentum at this level? Is there a trade? And then your stock calls.
Hi, good afternoon, Rima. Market has been in a downtrend, no doubt, on the daily chart. Market has been drifting down by forming a lower tops and bottoms. This is just a pullback rally of a downtrend. I'm not expecting any bigger upside from here onwards. At higher levels, 24,500, 600 is going to be a strong resistance. I wouldn't be surprised if Nifty come down again towards the recent low of around 24,300 in the near term. But important support is placed around 200-day EMA, somewhere around 24,200 levels. So from the stock side, I have a mixed strategy. One is from long end, one is from short. PSU banking has been in a consolidation phase, and recently it has outperformed the benchmark. And the Indian Bank, what we can observe on the chartically is making an attempt of upside breakout of the larger consolidation band somewhere around 650, 660 levels. The overall chart pattern is looking positive. Currently trading around 660. One can look to buy at this point of time, and the upside target would be around 700, and one can place a stop loss at 640. And second one is from a short side. IT has been laggard recently. We have seen consistent decline in IT over the last few weeks. And the Coforge is the one is continuously downtrend. In a downtrend, low tops and bottoms is on the chart. Recently, it has broken below the crucial support of 200-day EMA, currently trading around there. Currently trading around 1609 levels. One can look to sell at this point of time, and one can place a downside target of around 1535 levels. One can place a stop loss at 1650.
What about PG Electroplast? Nagraj, you've come down from 700 plus to sub 500 now. Does this 500 level prove to be a bit of a floor, or do you see more downside now on these distorted charts?
Yeah, I'm expecting more downside. The way it has reacted down after moving into a larger consolidation looks like a strong downside breakout. And though placed at the support level, still there is no indication of any reversal pattern forming at the lows. There is no indication of any buying emerging from the lower levels. I think 450 is going to be the next support for the stocks in the near term.
Okay, all right. Thank you so much, Nagraj, for joining. And that's about PG Electroplast. The stock is down 15% on that guidance cut. In fact, we have a lot of stocks which are on our radar. AC stocks are under pressure, of course. Ria is joining us with some details, the valuation picture, and a sectoral outlook as well. Ria.
Well, yes, today a lot of these AC and cooler stocks are facing a lot of pressure. These include PG Electroplast, Voltas, Amber and Blue Star. In fact, PG Electroplast is down as much as 15% after ending at a lower circuit of 20% on Friday. So let's see what's hurting all of these stocks. First, we've seen weak earnings coming in from Voltas in this quarter. PG Electroplast also reported a very weak set of numbers, and they've cut their guidance in a very major way for FY26. And we also have high inventory concerns weighing on the entire sector. So for Voltas, the quarter one FY26 numbers were below estimates across the board. The revenue was down around 20%. Even the EBITDA and net profit have seen a fall of around 58% each on a year-on-year basis. And the EBITDA margins have halved to just about 4.5% versus 8.6% in Q1 of FY25. Now, a lot of brokerages have come out with notes on Voltas. Nomura has maintained a neutral rating on the stock. They've said they've lowered their FY26 RAC industry growth estimates to 5% versus their earlier estimates of 10%, and they've also cut their FY26 and 27 UCP revenue growth estimates to 6% and 24% versus their earlier estimates of 13% and 21%. Jefferies, on the other hand, on Voltas has maintained a buy call. They've said that from here on, for the early festive season, the possibility of a second summer and the new BEE rating and tactical cost control could help RAC recovery going ahead. Moving to PG Electroplast, they've cut their FY26 guidance. The revised revenue growth guidance is now at 17 to 19% versus the earlier estimates of around 30%. And the net profit guidance has also been lowered to just about 3 to 7% versus the earlier estimates of over 39%. So a very major cut on the net profit estimates as well. But going forward, the company has said that, first of all, they've said that the revision of guidance was due to the lack of rebound in AC sales in July and August. But going forward, they are expecting a normalized inventory level of inventory in October and November, and that one season doesn't affect the overall business trajectory for the year. Now, just coming to the valuation picture quickly, for PG Electroplast and Voltas, they are trading below their 3-year averages at the moment, and Blue Star and Amber are trading below their 3-year averages.
Thank you very much for that. Earlier today, we also spoke to PG Electroplast, and that continues to remain under pressure. We spoke to Vikas Gupta, Managing Director, and we kept trying to ask him to understand that why the company couldn't give an indication that things are slowing down. Because this cut in guidance came as an absolute shocker, especially the extent of the guidance cut, especially when all signs were there, signals were there of a slowdown in AC sales. Listen in to what he had to say and what the outlook is going ahead.
As the channel inventory built up and there was no rebound in the sales for the air conditioners, the secondary sales of the air conditioners in the months of July and August, as we are seeing now. So we had to revise our guidance accordingly. in the month of May also, we were hoping that the market will improve, the demand will improve. We were having the order book, we were having the forecast from our brands, our customers, that was quite robust, and we were building on it, and we were believing that numbers, and we were going ahead with those production numbers. So it was only later in the July, in the month of June, that we saw that the secondary sales are not picking up, and the channel inventory is becoming huge. And that's when the demand from the brands fell off the cliff for us, and we realized that we are sitting on a huge inventory for us. We are already working on those capex guidelines that we have given earlier. We are building on our new product diversification. We are working the new launch of product platforms. We are building up new capacities. So the long-term story of the business remains intact. It cannot be impacted by the one single week summer. As of now, we do not see any downside risk to that number. So definitely the margins are getting impacted. We know that. But as of now, we do not see any downward risk to that. Level of inventory is almost a 1 month production. So we feel that by the month of October or November, we should be normalizing the inventory levels to a level of 1 month production. So we already have some kind of indication from the customers for the coming season, and we are working with them to see how to recover the situation. The equity holding of the promoters is, I think, 43% or 45% or 47% does not make any difference. It is that the commitment of the promoter family towards the business is more important.
All right, that's an important commentary coming in from PG Electroplast. With that, we'll slip into a break. Up next, we'll discuss the market fundamentals with Sunny Agrawal from SBI Securities.
Welcome back. Still some bit of resistance at that 24,500 mark for the index, but still holding on to some bit of gains. Just before we go to Mangalam for his FNO setup, they're still holding on to the day's high. But pull up NSDL, that has seen a bit of a cool off now from the highs after a move from 800 to 1400 plus. NSDL is now moved into the red, and it's a very, very sharp sell-off that the stock has seen from the highs of around 1420 now to around 1280 levels. 1.5% lower is NSDL. So almost 10% off the highs of the day has NSDL moved, a very sharp move from the highs of the day. Over to Mangalam now to tell us what the FNO data is indicating as the index moves closer to that 24,500 mark. Mangalam.
Well, the market has pulled back, 6 consecutive weeks of losses on the frontline index, and now it looks like maybe from oversold levels, there has been a bit of a bounce back that we've seen. Almost 100 points for the Nifty Bank doing better as well, and the mid-cap index. And if you look at the tug of war that is taking place in the mid-cap end of things, the advanced decline. Now the green line is marginally above the red line after a bit of a smidge and pull and push in the earlier part of today's trading session, but it's only again marginal. So seems like maybe the first couple of hours did belong to the bounce back. The question is whether it sustains or not. Going from here on the way up would be tough because of a couple of factors. One, even as the markets moved higher, what's also moved higher is the India VIX. Usually for the market to sustain higher, you would like to see the India VIX come off a little bit. And secondly, the Nifty, today's high has been very close to the 100-day moving average of 24,494. So if only we cross beyond that is something that we will watch out for. And can we sustain and cross beyond that? The answer to that question lies on the Nifty Bank. So what's a resistance for the Nifty is actually a support for the Nifty Bank, which is the 100-day moving average, closer to that 55,000 mark. And just as we speak, the IT stocks are picking pace. So if they continue to do higher, you will have two engines of the Nifty taking it higher as well. But amidst all of this, we've seen a lot of shorting activity take place in a couple of stocks, Amber and Blue Star. So all of these consumer discretionary names after a weak summer are seeing some shorting activity, and one stock that is most likely to go into FNO ban today is PG Electroplast. We've been talking about how the stock had underperformed ever since it trimmed its guidance and came out with poor numbers, and the management joined us on this channel today as well. Stock's down another 15%, taking this monthly losses to almost 40%, and with the kind of open interest surge that we've seen at 105% of market-wide position limits this early in the day, the stock's most likely to go into FNO ban, so I'll watch out for that.
All right, so that's the FNO setup. Thank you so much, Mangalam, for joining in with that. Let's go across to Sunny Agrawal from SBI Securities now to discuss the market fundamentals. Sunny, thank you so much for joining in. What is the market factoring in? Is it the tariff situation? Because we still have till 26th of August to get the next round of negotiations as well. Is it earnings? Because it's the sixth consecutive week of losses that we saw on the Nifty, but today we are seeing some green. What, according to you, will be the next big trigger for the markets?
Yeah, good morning and thanks for having me on the show. I think, yeah, definitely, I think trade, a tariff negotiation is something which is a big overhang on the market, and that is leading to weaker sentiment as far as the last trade is concerned. But I think going forward, ultimately, markets are driven by the earning growth, and even the earning growth this quarter has been kind of a mixed bag. Even within a sector, we are seeing a few companies reporting a better earning compared to their peers. So I think September quarter onwards, we believe that the earning for Nifty 50 and broader universe should scale back to a double digit. If you remember, last September quarter was the first quarter year over year where we have seen a kind of slowdown in pace of earning growth due to the lower government capex. And on the low base, we are expecting that September quarter onwards, the earnings should rebound to double digit, and that should at least help the market to sustain at the current valuation, which is close to 20 times to 1 year forward price to earning multiple. Having said that, we believe that at current juncture, the action is stock specific. The companies which are delivering a decent set of numbers with an healthy growth visibility over the period of next 4 to 8 quarters, their street is rewarding those companies. So I think going forward, anyway, market is likely to be a stock specific.
Sunny, hi. Morning, Rima here. Talk to us about Tata Motors. Numbers were okay. Their EBITDA was down 35%. The company said that the tariff impact will be 500 to 600 million pounds in FY25 itself. But the stock is up 2.5%. What is it that the street is excited about, post the numbers or from the commentary or looking ahead?
Yeah, so coming to Tata Motors, I think most of the negatives were already in the price. So we have already seen that stock has corrected from highs of close to 1100 to now trading close to 700, 600 price band. And I think anyway, Tata Motors has cautioned the street on the weaker growth expectation for the fiscal year 26. And on the top of that, because of the global uncertainty, we have already seen a weaker set of numbers reported by Tata Motors. So I think on valuation front, we feel that most of the negatives are priced in, and hence we have not seen an adverse reaction in today's trade. Once we get more clarity on a growth trajectory as far as both the domestic portfolio on passenger vehicle as well as on international front JLR portfolio, at that point of time, street will start rewarding Tata Motors shareholder. At a current juncture, we believe that M&M is relatively well placed, and hence that stock is also trading close to 52-week high. Both the businesses firing simultaneously. One is passenger vehicle and other is farm equipment segment. So we have got a buy call on M&M with a fair value of 3,600.
Sunny, what about the recent listings, the two major ones that have listed in the last 2 months? HDB Financial is one of them. It was a somber listing, and since then the stock has only flattered to deceive. It's only now back to its IPO price. Whereas on the flip side, NSDL has moved from 800 to 1400 plus and has now seen a very, very sharp correction over the last few minutes. Would you advise booking profits here in NSDL, considering the move that it has seen? And also if you have a view on HDB Financial.
Yeah, so coming to NSDL, yeah, definitely at the time of listing, the valuations were relatively cheaper as compared to its peer CDSL. And now post recent run up, now I think the valuation catch-up game is over. Sorry. And going forward, in case NSDL is able to catch up on a retail side in terms of market share gain on account opening front, we believe that NSDL can sustain a relatively expensive valuation compared to CDSL. So we need to track the data. Yes, obviously, if somebody has got an allotment during an IPO, we have seen a very decent up move. And if somebody was looking for a short to medium term gain, one they can look to book the profit. But if somebody is a long term investor, I think any dip over the period of next 5 to 10 days can be a good opportunity to add to the portfolio. Coming to HDB Financial Services, again, as we have seen that certain pockets are witnessing an asset quality issue, whether it is MFI or unsecured book, and that is something which is weighing on all the NBFCs company. And we have recently seen some NBFCs are reducing their growth guidance, and that can have an rub-off effect on other financial services or NBFCs firms like HDB Financial Services. I think again, long term, we believe the growth opportunity for this entire NBFC industry is very well, and going forward, maybe 12 to 13% kind of advances growth. It should not be an issue for large players like HDB Financial Services. I think any correction is a good opportunity to accumulate in the portfolio.
Okay, so that's about some of the new listings. Sunny, what about these oil marketing companies? This particular announcement of compensation of 30,000 crore rupees, it is positive, of course, but the stocks have come off from the highs of the day. What take do you have on the entire space?
Yeah, so coming to oil marketing companies, yes, definitely, I think this news flow was positive, but I believe that the ongoing trade negotiation wherein there can be an reduction in sourcing of a discounted crude from Russia, that can have some negative sentimental impact as far as oil marketing companies are concerned. We believe that on valuation front, anyway, oil marketing companies are trading at a very reasonable valuation. So downside is limited, risk reward continue to remain favorable. I think again here our top pick will continue to remain HPCL. So once this trade deal overhang is through us, then we may see again a bounce back in all the oil marketing companies. But if I have to pick one stock, HPCL is the one stock wherein we believe the fair value is close to 480 rupees.
Okay, HPCL, so about a 20% upside from current levels, 480 the preferred pick. Thank you very much, Sunny, for joining in. Get into a break. On the other side, we put the spotlight on buzzing stocks like Yatra Online and Siemens.
Welcome back. You're still tuned into Trading Hour. Well, before we get stock specific, let's quickly take a look at the Nifty. It's down sharply from the highs of the day, up just 47 points as we speak. When we started the show, the Nifty was up around 100 odd points. In this hour itself, we've seen some fall from the highs coming in for the likes of ONGC, there's Hindalco, Eternal, names like IndusInd Bank. That stock should also come up for you on the screen. So IndusInd Bank has come off from the highs of the day. We do have the likes of Hero MotoCorp, Tata Motors. Some of these big names are seeing some fall from the highs as well. Tata Steel is one of them, which is at the day's low as we speak. So is Bajaj Auto. So some of these auto names are leading to the fall that we're seeing from the highs for Nifty currently. We'll keep tracking those moves for you, but let's get stock specific now. Siemens is the stock on our radar. Vamakshi is joining us to tell us why the stock is on our radar today.
Well, Sonal, the stock is in focus on the back of its Q3 September year ended 25 numbers. Siemens follows a September year end, so which is why it's Q3 for them. Keep in mind that the revenue growth here came in at almost 16% on a year-on-year basis. This is 4% higher than what we were expecting, and therefore it's driven by largely better execution. But on the flip side, when you look at the operational performance, the other expenses grew by almost 40%. The project bought outs and other direct costs were up almost 22%. Resultantly, the EBITDA margin came under pressure, down almost 90 basis points, and in fact slightly lower than what the street was anticipating it as well. So therefore it's a miss as far as the EBITDA margin is concerned. EBITDA came in 7% higher, but the net profit declined by 3% on a year-on-year basis, and that is because the other income declined by almost 21% on a year-on-year basis, and therefore it missed the street expectations. So let's also look at how specific segments performed this time around. Good growth came in from mobility, which was up almost 34%. The smart infra business also, which is a major contributor to Siemens revenue, saw an uptick of almost 21%. But what did not do too well is the digital industries, which was down almost 5%, and low voltage motors also saw subdued growth of around 1%. Now let's look at how each of these segments contributed to the margins as well. The sharpest fall came in low voltage motors, down almost 1,150 basis points. The margins for smart infra also were under a tad bit of pressure. But on the flip side, mobility and digital industries reported an improvement in their margins as well. Ordering ordering activity came in at 5,680 crores. This is the order inflow. This is up almost 13% on a year-on-year basis and has come in higher than what some of the brokerages were anticipating. So bodes well for the company. The order book too seeing an uptick of 8%. Nuvama has a hold rating target price of 3,170 rupees per share. Overall, operationally, it's a weak set of numbers, but the ordering activity was good, and probably that could be the reason why the stock has seen a good recovery.
Indeed, Vamakshi, thank you for that. 2.5% higher on Siemens, a very sharp recovery from the lows of the day, almost 150 plus rupee pop from those levels. On the other side, Yatra.com online is the other one, a 20% upper circuit on the stock after its results. Mangalam is here to break down those numbers. Mangalam.
Well, good performance coming in from Yatra.com. In fact, if you look at the large part of their business which comes in from corporate travel, that's actually done well for them. And additionally, if you look at the reported numbers as well, if you compare it to what the company reported same time last year, even as the gross bookings have grown just 9%, the company's own revenue recognition has led to a big jump. 100 crores has turned into 209 crores, and that's flowed down all the way to the bottom line. So EBITDA has actually risen from just 4.5 crores all the way up to 23 crores, telling you that there has been a sharp margin expansion from 4.5% all the way up to 11%. And that's not all. We've had the net profit as well surge all the way up from 4 crore to 15.9 crore. Remember, gross bookings are up 9%. So what explains this big improvement in performance? Their take rates have improved. At the same time, their revenue from corporates have improved. And their hotels and packages business, along with contribution coming in from the meetings, events, and all the other sectors, has seen a big surge. They've also closed 34 new corporate accounts during the quarter, and gross debt for them has come down from 54 crores to 2.9 crores quarter on quarter. So that's aided their finance costs too. If you look at the gross margins, air business as well has seen a big surge in gross margins from 3.1% to 4.6%. And remember, while on an absolute level these look small, 3 to 4 or 4.5, or for hotels business 7.5 to 9%, but the kind of volumes that these online travel aggregators work on, even a percentage basis points improvement in margins actually has a bigger impact on their overall numbers, and that's something that we're witnessing on a low base. Strong performance, and the stock up 20%.
Thank you very much for that. Get into a break. On the other side, we'll talk about ICICI Bank. It's raised the average minimum balance to 50,000. Welcome back. Now, ICICI has decided to increase the minimum balance to 50,000. Now, the question is, what are the implications of this? What happens to people with the lower income who do not have sufficient balance to keep their account going? Why has the company done that? Is there a regulatory angle to it? Ritu joins in with her understanding. Ritu.
Well, Reema, starting the 1st of August, and this is already in effect, ICICI Bank has significantly increased the minimum monthly average balance that is required for new savings accounts. So, for instance, just to quickly recall the charges for customers in metro and urban areas, the new minimum monthly average balance is 50,000 rupees, which is 5 times the earlier amount of 10,000 rupees. In semi-urban branches, it rises to from 5,000 to 25,000, while for rural branches, it is double to 10,000 rupees. Now, this is the highest minimum balance savings account customers have to keep across any bank in India at the moment. Now, if the required minimum balance is not maintained, ICICI Bank is going to charge a penalty of 6% on the shortfall, or 500 rupees, whichever is lower. But keep in mind, these changes apply only to the new savings accounts that are opened on or after the 1st of August. So existing accounts will continue under the current minimum balance rules. There are also some accounts which are exempt from this hike altogether, and that includes all salary accounts, pension accounts, the basic savings bank deposit accounts under RBI guidelines, the PM Jan Dhan Yojana accounts, they all remain zero balance accounts. Now, the big question that everybody seems to be asking, why did ICICI Bank do this? Now, while the bank has not officially given any statement yet, the move is being seen as a clear strategic shift away from masses to target the more affluent customer segment. Now, for the bank, this makes sense because this will bring various benefits, more stable deposits, improvement in CASA, higher balances that will come in at lower savings rate compared to, the higher FD rates the bank would have to pay, so lower cost of funds, improvement in margin. margins, more premium cross-selling opportunities, strengthen the liquidity position, and the potential, of course, to reduce the dormant low-value accounts, to name a few. But to put this in perspective, other private banks like HDFC, Axis, Kotak, Yes Bank, they usually require about 10,000 in urban areas, which is much lower than ICICI Bank's new level. Now, in contrast, of course, there are public sector banks like SBI, Canara, Punjab National Bank, to name a few, that have no minimum balance requirement at all. So for customers, there is a wide variety of options that remain open, but for new ICICI Bank customers, 50,000 rupees minimum balance is something they will have to maintain. It'll be interesting to see if other private banks also follow the move and how the regulator reacts. Now, to be clear, ICICI Bank is not breaking any rule, because RBI merely says that bank charges should be reasonable and they should be commensurate with the cost of rendering the service, but there is no prescribed cap on the minimum balance that banks can have for savings accounts.
Okay, thank you so much, Ritu, for joining us and explaining that to us. This is something which is very important from consumer interest point as well. So thank you for making sense of that news. With that, we'll take your leave on this edition of Trading Hour with the news that Nifty has come off sharply from the highs of the day. It's up 50 points, a 50-point downtick from the highs, though still in the green. That's the case across the major indices. From Rima, Hormuz and myself, thank you so much for joining in. Stay tuned. Halftime report comes up next.